And I'll start with you, and I'll start with that Fed meeting on Wednesday and that press conference. Not necessarily a surprise what they did, but were you surprised at what Powell had to say?
So, I actually feel in some ways that Powell got a little bit of the short end of the stick this time around. I've historically been quite critical of the communication that the Fed does. But I think this time around, they paused for a very valid reason. They hadn't guided the market. Well, valid in some people's minds, this Fed doesn't like surprising the market, and it chose not to do so. However, I think they really made it clear that sometimes a pause is really just a pause, and that's what this meeting was. Prior to the meeting, there was a reasonable quantity of people who thought, reasonable portion of the market, which believed that the pause was really the end of the hiking cycle. It's not. That's abundantly clear. And I think that we saw action from the Bank of Canada, from the Reserve Bank of Australia, both in recent weeks have come back. Recent months have come back from pauses. And so I think the market is beginning to be more realistic about what the Fed's outlook is here.
How do you feel about that, Tracy? We say a pause is just a pause, and of course, even Jay Powell had that Freudian skip during the press conference there. Is there some distinction that we should be paying attention to here?
Freudian skip, was that a Freudian slip of your own there, Romaine, or
No,
just a
I
really
came up.
good
I've been working on that
pun?
all day long.
That's excellent. I really appreciate that. No, I mean, I agree with Sanal to some extent. I think the confusion arises because you had a pause, which is not a hike. And then if you looked at the longer term dot plot, it was clearly indicating tighter policy. So people are trying to reconcile those two messages. That said, the linguistic debate over whether it was a hawkish pause or a skip, I tend to lean towards a skip. I was reading, funnily enough, Tim Dewey before I came on the show, and he was making the case that he thought the Fed had made up its mind basically back in May to pause at this particular meeting. Of course, they're not allowed to say so. Each meeting is supposed to be, an independent decision, data dependent. But that said, if you look at the data that's coming out between now and July, there isn't a ton of it. I think Nick Tamaros from the Wall Street Journal actually asked Powell this question. And so the conspiracy theory now is that, well, maybe the decision for a hike in July has already been made.
Well, so now pick up on that here. I love a good conspiracy theory. I am curious. I mean, it's one thing to say we don't want to surprise the market. If this is how they guide it, great, follow through with that. But was the data that they're looking at, the same data that I'm sure you see and that Tracy sees, was that supportive of a pause?
I think you're looking at the wrong data. Romaine, you should be looking at core. Core is at 5.3. Core CPI has essentially not budged in over a year. If you pull that chart up, I think you'll see what the Fed is looking at. And right now, core is higher than headline. And I think this is going to remain the case for a major part of the remainder of the year. That core CPI, which is something we've been focused on now for a couple of years, is very, very sticky. And it is following the trend that we're seeing from wages, which is still growing at roughly core. So if I look at those two factors together, I think the Fed has every reason to continue to hike. And after hiking, I think the more interesting thing is that they expect to cut a reasonable amount. The market expects them to cut even more. I'm not sure that we're going to get as much by way of cuts and what I would consider the resting point for Fed funds after we've hiked. Call it to 550, call it to 575. Eventually, the Fed will cut, and I think it will cut quite substantially because it's going to take us back, because it will presumably cut because it needs to stimulate a slowing economy. Might take us back to 2.25, but after that, I don't think that's where the Fed stays. That's where I disagree with the Fed right now.
I think there is some disagreement in the market as well, Tracy. We talk about the big rally that we saw in equities. The moves that we saw in the fixed income space seem to suggest a little bit more, I think, along the lines of what Sanal is thinking herself.
Yeah, I mean, I got to say, it makes me a little bit uncomfortable to be optimistic, but in some respects, you saw a lot of optimism on Wall Street today that was reflected in things like risk assets, things like equities. And it makes some sense. I mean, to the Fed's credit, just last year, Powell was talking about how it would be extremely difficult to get inflation down to target without below trend growth. And yet here we are in 2023. It does seem like inflation is beginning to reduce, although to Sanal's point, it's still double the 2% target, of course. However, it's happening while growth is still relatively strong. We haven't seen a substantial increase in wages. We certainly haven't seen a significant rise in unemployment. And people are starting to talk about that proverbial soft landing. Now, how you define it, does the Fed have to get back to 2% in order to have achieved officially the soft landing? I think that's open to debate, but I am seeing a lot of people talking about upside risks at the moment.